Hi everybody, today we are going to talk about head and shoulders, one of the most famous patterns on the financial markets used in the traditional technical analysis. We are going to point out several main features that we have to keep in mind when we are dealing with head and shoulders with this pattern, and how to recognize, how to use it, and how to trade on this figure. And then we are going to take a look at the real price charts on the financial markets. We are going to consider a couple of financial instruments. Okay, let's get started. First, we should keep in mind that head and shoulders is a reversal pattern. What does it mean? Before we see head and shoulders, before we take into consideration, this is the figure head and shoulders, we should have before that certain amount of uptrend. What does it mean? The prices should have moved upward for a certain amount of time. How we determine the uptrend? We've got higher highs and higher lows. In other words, we have uptrend. And then at a certain moment, what it appears, up until this moment, we've got higher highs. Every time the bulls, the buyers, they succeed to reach a new high with entering new orders that sounds how buy. Okay, and after this moment, it appears that the bulls are a bit exhausted. In this perfect case, what should we look for before we see this figure? It might happen that actually even at this moment the previous trend line has been broken. In other words, the previous trend is over. The sellers, the bears, have succeeded to break down the uptrend, and then we see, let's say, a retest, unsuccessful retest. What do I mean? The buyers are trying again to push up the prices to get back again into the old uptrend, but they do not succeed. And what we've got here, a lower high. So from this moment, even from just at this point, we may consider that we've got actually a sell signal. Even in this case, it's a better sell signal. But when we are talking about the head and shoulders, what we have to look for? First, we should have this figure. We've got three highs, and the right hand side high is lower than the top. So we're gonna say that this is the left shoulder, the top, the head, and the right shoulder. So from this moment, what we have to look for, the next thing, is we have to take a look at the bottom of the head. Taking a look at these bottoms, we have to put the so-called neckline. This is the neckline. And what it says, the traditional head and shoulders pattern. Once this neckline is broken down, we've got here a traditional sell signal. And not only this, we've got a sell signal, and also we have a target zone. Target zone, what do I mean? Where the prices most probably are going to reach after breaking the neckline. This target zone is determined by this measure from the size from top of the head and up all the way here, going down to the neckline. So we are taking this measure, this H, and we are projecting it on a downward from the point where this neckline has been broken. Okay, so most probably once we've got this sell signal, most probably the price will go down, up until reach this target price. So how we can use this information? We should put here our sell order short, and here we're gonna use this as a take profit. Take profit. Take profit zone. This is very good because you know how difficult it is when you are trading on the market, you are analyzing. You must have certainty. You have to trade with confidentiality. You have to be confident in what you are doing. And in this case, there are many researches about how valid is this figure, head and shoulders. And some of the research say that actually in 80% of the cases when we have a clear head and shoulders, in 80% of the cases this is going to happen, and 80% of this target zone is going to be reached. This is a very huge probability based on the historical basis, on the historical data. That is why this figure, head and shoulders, is so strong, so powerful, and we have to use it. Also, apart from this, let's take a look at something in addition. In order to be sure that we've got head and shoulders and we are up to put our sell signal, we may use some confirmation signal. We're gonna use RSI. You can put also MACD or let's say stochastic, some other, but I would prefer to use RSI. This is a traditional indicator that we can catch divergency. That's what I'm talking about. So what we have to look after, when the prices are going up between the left shoulder and the head, the top, the highest high reached from this uptrend, it appears divergency. What is divergency? We've got here lower high on the indicator RSI. On the prices we've got here higher high. But what it means divergency? The market is losing momentum. Yeah, they have reached, the buyers, the bulls have reached a new high in the prices, but actually they are losing momentum, they are losing energy, which is the first sign that there might happen a reversal from this trend, from uptrend going to downtrend, or at least a correction. Only I just have to open small brackets here. Actually, from the point of view of the Elliott wave analysis, you know, I'm a huge fan of Elliott wave analysis. This actually could be either, if it is a correction, this might be A, B, C, or it could be even first wave, second wave, and third wave. In both cases, we are not sure what is this actually, what's going to happen from this on, from this moment in the future. But in both cases, in this wave, there is a huge amount of energy. In other words, there will be a huge movement, and we have to use this movement to take some profits. Okay, a couple of words about the inverted head and shoulders. What is inverted head and shoulders? Is like a mirror image of from the traditional head and shoulders. Just it happens after a downtrend. Okay, what we have to look here. We've got left shoulder, head, and right shoulder. We've got again the same features. The right shoulder, in other words, this dip is a bit higher than the previous one. What it happens until this moment, for a certain amount of time, sellers have been strong enough and they're pushing the prices down with every cycle on the market. Okay, what we have to look here, again, we have to draw this neckline. This time the neckline is, we have to draw it from where? From these tops between the head and the shoulders. Okay, and here what it says, the traditional technical analysis: once this neckline is broken from down to up, we've got buy signal, traditional buy signal. And also what we have got here, we have again target zone. How is determined this target zone? Between this we have to measure this this size from the head of the shoulders until up to the neckline, and we project this measure from the moment where the neckline is broken. This determines to us the potential target zone, where we have to do what? Where we have to take our profit. For take profit. Okay, most probably, as I said, this has been done from many researches on the financial markets, when we have clear head and shoulders. In 80% of the cases, when this happens, 80% of this target zone is going to be reached. So, in our words, most probably is going to happen this hop, 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 up until here. From then on, we are not certain what is going to happen. But this is enough for us to make a good profit from this market. Again, how we can confirm that this is happening? We can confirm it with using some indicator to show us divergency. In this case, how it's going to look like divergency. Let's look here. We've got higher low. In other words, this dip is a bit on a higher level than the previous one. This divergency between the prices and the dips in the indicator, they tells us, oh, it is obvious that actually the prevailing group, in this case the sellers, the bears, they are all a bit exhausted, and which is the first signal that it might happen a reversal from this downtrend up to uptrend. Okay, these were some of the main features, what we have to look when we are trying to trade on this pattern head and shoulders. Okay, let's jump onto the real price charts to see how they look like. Okay, let's take a look at the real price chart. This is a price chart of Bitcoin versus United States dollar. This is on a daily basis. So we've got here two head and shoulders. The first one you can see here is inverted head and shoulder. Here is the left shoulder, here is the head, here is the right shoulder. Once the prices broke the neckline, we've got here the price target. So, and right here a bit later, we've got again a traditional head and shoulder, left shoulder, head, and the right shoulder. Once the neckline is broken, we've got here the target zone. So what we have to do first, when this figure appears in front of us, it is up to us to put this neckline right here between these two tops, then to take this measure as we discussed on the whiteboard, and to let's just put it here, and then to projecting it from the point where the prices break the neckline, and this will give us a price target where we can take our profit. Okay, also what we discussed, we can use indicator like RSI to see if we have divergency that will confirm our figure. Let me insert here RSI, oscillators, relative strength index. I'm gonna leave it in this way. Okay, so we can see here between the left shoulder and the head that we've got a divergence, but let me just to make it to be more visible. See, between these 2 points, what we've got here, we have a little bit higher lows in indicator RSI, and on the prices we've got lower dip, which means that the prices continue to go down, but I'm gonna remove this just to be clear. So we can see here how it is the inclination. We have a lower dip in the prices, but we got higher dip in the RSI indicator, which confirms that the bears might have exhausted, and it may happen this reversal from down to uptrend. Okay, let's take a look at the next example. Here we've got left shoulder, head, and the right shoulder. It's up to us to put here the neckline. Let me just put here, this is the neckline. Okay, so once this neckline is broken, where exactly this happen? It happens exactly right here, when we have for the first time close below the neckline. Here we've got a signal for sell right here, and also we have this measure that we discussed for where we may expect our target zone, where we can take our profit from the short position in this. Okay, let's have a look at a couple of other examples. Here we've got also euro dollar. We have again two head and shoulders. So in this case it is a pretty short uptrend before this figure to appear, but we have again this let me just point out, this is the I'm sorry, this is the left shoulder. Here is the and here is the head, here is the head, and here is the right shoulder. Okay, we can see clearly that we've got this figure head and shoulder, left shoulder, head, and the right shoulder. Here we have a clear break through the neckline, and we can see how actually at the first declining of the prices didn't match the entire target zone. We can say that this is at about 80% of this target zone has been achieved, has been reached, just in a matter of 7 bars, which means in 7 days 80% of the target zone have been reached. The next, here we can see again, here actually the target zone have been even passed, but we've got again left shoulder, head and the right shoulder. After breaking the neckline, we've got a huge down movement. Okay, one more example. Yeah, this is the OC, Australian dollar versus United States dollar. We have again left shoulder, the head and the right shoulder. Here we've got break through the neckline and we have target zone. We can see how clearly the target zone has been achieved. Once again, I would like to point out that it is up to us, like traders, like analysts on the financial markets, that we have to be prepared when we see this figure. It's up to us to put the neckline, to be aware and to be ready how to react, how to trade on this figure. Let's see how this figure appears in front of us. At this point you can see this is the left shoulder, the head and the right shoulder. At this moment we have to put here the neckline and to expect this this break of the neckline. Here we have to put our sell position and to project this profit zone. As we said, this measure from the top all the way down to the neckline, and then we're projecting it from the point of breaking the neckline, and here is our target zone. In other words, here we can use this zone to take our profit.